Discovering high-quality dividend stocks with attractive yields and sustainable payouts can be challenging, but every now and then you come across a truly amazing stock that for some reason is trading at a discount. Markets are panicky and fickle, and today we have a high-yield dividend stock that in a sane world would never trade this low. I'm surprised more people aren't talking about this little-known energy stock, but I digress. Make sure to stick around for the last part of my analysis where we see how much of this stock you'd need to buy in order to retire. It's probably a lot less than you're expecting. Today we're diving into the world of Enbridge Incorporated, ENB, and exploring how this energy company makes money and analyzing their dividend. Enbridge is a leading energy infrastructure company that operates across North America. They play a crucial role in transporting and delivering energy products, mainly oil and natural gas, to consumers and businesses. But how exactly do they turn this into revenue? Enbridge generates its revenue from three main sources. First, they earn money through their liquid pipeline segment. This involves the transportation of crude oil, liquids, and refined products through their extensive pipeline network. Think of it as a superhighway for energy, connecting production areas to refineries and markets. Enbridge charges fees to oil producers and refiners to use their pipelines, which generate a significant portion of their income. Next, we have their gas transmission and midstream segment. Enbridge operates a vast network of pipelines that transport natural gas across the continent. They earn revenue by charging fees to natural gas producers who use their pipelines to move their products to distribution centers and end users such as power plants and industrial facilities. Finally, Enbridge generates revenue through their gas distribution and storage segment. This part of their business focuses on delivering natural gas directly to residential, commercial, and industrial customers. They operate distribution systems that bring natural gas to homes, businesses, and other facilities, and charge fees for the delivery and distribution services provided. Now that we've examined how Enbridge Incorporated generates its revenue, let's delve into the intriguing financial landscape that underlies its multi-decade dividend growth and reveal the key metrics that drive its success and benefit its shareholders. If you're enjoying this video, make sure you subscribe for more dividend stock analysis content every week and like the video for the YouTube algorithm. Over the years, Enbridge has demonstrated a commitment to returning value to its shareholders through consistent dividend payments and a strong focus on financial growth. Enbridge currently pays a quarterly dividend of 89 cents per share and has paid $3.47 per share over the past year. This represents a dividend yield of 9.25%, which is calculated by dividing the annual dividend per share by the current stock price of $37.48. Enbridge has an impressive track record of increasing its dividend for 26 consecutive years. This streak highlights the company's dedication to rewarding its shareholders. Over the past 10 years, Enbridge has achieved a remarkable dividend growth rate of 10.65%, reflecting its commitment to delivering consistent returns to investors. Enbridge's financial strength can be further assessed through its payout ratios. The net income payout ratio, which measures a proportion of net income distributed as dividends, stands at 109%. Similarly, the operating cash flow and free cash flow payout ratios are 51% and 74% respectively. These ratios indicate how much of the company's earnings and cash flows are being allocated towards dividend payments. Although the net income payout ratio is high, operating cash flow payout ratios have remained below 75% for the past 5 years, indicating to me heavy investment in new infrastructure and large deductions to reduce tax burden while keeping the dividend safe through strong cash flow. Additionally, ENB's dividend policy aims to keep the dividend distributions around 60 to 70% of discounted cash flow, which it has maintained over the past 28 years. Enbridge has demonstrated solid growth in key financial metrics over the past 10 years. Net income, a measure of profitability, has experienced a 26% growth rate. Operating income, which reflects the company's core operations, has also witnessed strong growth with an 18% growth rate. Furthermore, Enbridge has generated healthy growth in operating cash flow, which has increased by 17%. Free cash flow, a measure of cash available after capital expenditures, has grown by 13% per year. These growth rates highlight Enbridge's ability to expand its earnings and cash flows over time. Let's see how much ENB you would need to buy today in order to retire in 20 years. In this scenario, we're assuming you buy 150 shares of ENB at their current share price of $37.48 and never buy any additional stock. If we assume a continued 10.65% annual dividend increase amount and 2% annual share price appreciation, we can expect almost $56,000 per year in dividend income after 20 years. A small one-time investment can literally set you up for life with this opportunity. Given the recent drop in share price and spike in dividend yield that hasn't been seen for over a year, I'm definitely getting in on this stock. Their multi-decade dividend increase streak coupled with safe payout ratios indicate a company dedicated to safe, reliable distributions to shareholders. The long-term outlook of the company is strong with solid financial growth, and the energy industry as a whole is booming. For my analysis, I see ENB as a gem worth looking into. Make sure you hit like and subscribe for the YouTube algorithm and leave a comment. Till next time, stay safe and take it easy.